We're Essentia Health. We're in the business of streamlining and automating processes and have even automated the production of new software. Today, we are going to talk generally about the state of health insurance in the U.S. and how they avoid payment through unnecessary complications in particular. Insurance is nothing more than a way to manage risk. You and society at large pay insurance companies a small amount, and they pay if something horrible happens to you. My grandfather left me a clock he built, and it is one of my most prized possessions. There is little chance that something will happen to it, but I want to insure it in any case. Let's say it is worth $1,000, and the insurance company will insure it for $1 per month. If something horrible happens to it, they will fix or replace it. Health insurance is like that too. Insurance only pays for procedures. That is all that is covered. Your doctor doesn't get paid until they perform a covered procedure. They aren't paid to keep you healthy. They aren't paid to actually solve the problem. They are paid to do the same procedures in their specialty all day, every day. Paying for procedures instead of health is a problem. Further, dental and vision aren't covered, and sometimes, well, usually, mental health isn't covered either. So, your teeth, eyes, and brain aren't part of your body. This is all a big problem. What is all this jargon and alphabet soup they throw around, and why is it so complicated? Here is a short list of definitions. The premium is the money you pay to have your risks covered. In the clock example earlier, the $1 is the premium, usually due monthly. It is a subscription fee, like you pay to YouTube or Netflix. In an effort to persuade you to not use your health insurance, the company assesses a fee, called a deductible, for charges that you have to absorb before the insurance starts paying. For example, let's assume deductible is $500 and your insurance year runs from January 1st to December 31st, and your annual deductible hasn't been met. If you need a $500 procedure, you pay $500 and insurance pays nothing. That is, if you don't have a copay or coinsurance. Copay is the amount that you have to pay for a certain procedure regardless of the status of your deductible. If your $500 procedure has a $50 copay, you pay the $50 even if your deductible has been met. Coinsurance is the percentage that you have to pay for a certain procedure regardless of your deductible. You are literally sharing the risk with your insurance company. Aren't you paying them to manage the risk? Yes. You are also sharing that risk with them, which is what you are paying them to do. Okay. If our $500 procedure above has a 20% coinsurance fee, you are still paying $100 for this procedure regardless of your deductible status. Every test or procedure will have a different copay and coinsurance negotiated separately. Copays and coinsurance do not count toward your deductible. They do, however, count toward your out-of-pocket maximum. Finally, here is some good news. This is the maximum you will have to pay out of pocket for the insurance year, unless you go to an out-of-network provider. Then that doesn't count toward your out-of-pocket maximum. The annual maximum benefit is the maximum amount your insurance will pay for the year regardless of your needs. The lifetime maximum benefit is the maximum dollar amount that an insurance company will pay for benefits for as long as an individual is enrolled in the plan, regardless of need. Seems to me like they give out-of-pocket maximum with one hand and take maximum benefits with the other. In-network providers are those practitioners and practices that your insurance company has a contract with to provide your procedures at a reduced rate. That means that the insurance company hires an attorney to go sit in a boardroom and convince your doctor to take less than the going rate, or they won't get paid at all. Talk about the tail wagging the dog. Who pays for this attorney, boardroom, lost productivity, and general unnecessary monkey motion? That is correct. You do. Out-of-network providers are the practices and practitioners who told your insurance company to get bent. They aren't accepting their insurance. They refuse to sit in the boardroom with the attorney you are paying for to get screwed. Good for them. Prescription drugs are broken down into tiers that are associated with their cost, basically. Tier 1 includes generic drugs. Tier 2 includes brand name drugs. Tier 3 includes non-preferred brand name drugs. Tier 4 includes specialty drugs. Some providers have 4 tiers, some have 5, but they skip the third, and so on. If you want to know what tier a certain prescription is, you have to call them. By call them, I mean that if you go looking for their drug formulary online, you will get a page with hundreds of links to PDFs that are hundreds of pages long, that are the Cartesian product of all the plans and all the drugs to figure out what you will pay for that script. This is insanity. Open enrollment is the time that everyone can change their health insurance. That is correct. You can't get a new policy unless you are between November 1st and January 15th, depending on your state, no matter how much you want or need to. That means you are locked in for the entire year and can't change outside of these dates. Your choices then become keep getting screwed by your current provider or don't have health insurance altogether, unless you have a qualifying life event. In the individual family market, qualifying life events include birth or adoption of a child, marriage and divorce if the exchange or insurer counts it as a qualifying event or if the divorce triggers a loss of other coverage. Loss of other coverage, as long as the coverage you're losing is considered minimum essential coverage, including COBRA. Permanent move to an area where different health plans are available, as long as you already had coverage prior to the move. Change in income that changes your subsidy eligibility, may not apply off exchange in states that run their own exchanges. Increase in income that moves you out of the Medicaid coverage gap. Grandfathered or grandmothered plans non-calendar year renewal, or becoming a U.S. citizen or lawfully present resident only applicable in the exchange. Consolidated Omnibus Budget Reconciliation Act. If you lose your employer-provided health insurance, you can continue it for up to 18 months by paying the entire premium yourself. Spoiler alert, do not do this. It is amazingly expensive. Health Maintenance Organization is a plan made up of a network of doctors, hospitals, and other healthcare providers who have agreed to set rates for services. Remember the stupid expensive lawyers and boardrooms above? Preferred Provider Organization is like an HMO or Health Maintenance Organization. A PPO plan offers a network of healthcare providers you can use for your medical care. These providers have agreed to provide care to the plan members at a certain rate. There are differences. PPO plans do not require you to choose a primary care physician and do not require referrals. For example, if you already have a doctor you like, you can continue receiving care from that provider. If you need to see a specialist, you do not have to first consult with a primary care physician. No referrals are required for any doctor, specialist, or hospital. If you find yourself in need of medical care when you are away from home, you can see any healthcare provider you choose. PPOs are more expensive. Exclusive Provider Organization is the plan that only covers in-network providers, but it allows you to go straight to a specialist whenever you want. Here are some differentiators. Exclusive Provider Organization plans only cover the cost at doctors or health providers that are within your network. Emergency care is covered, even if it's out of your network. You do not need a referral if you want to see a specialist with EPO insurance. An EPO is a hybrid between an HMO and PPO plan. Point of service is the type of health insurance that offers a mix of HMO, Health Maintenance Organization, and PPO, Preferred Provider Organization features. Policyholders need to designate a primary care physician and generally require referrals to see specialists. They allow out-of-network care. They are cheaper than PPOs, but more expensive than HMOs. It seems that health insurance is doing everything it can to obfuscate the issue, creating alphabet soup, avoiding giving a straight answer to any question, putting layers of provisos and caveats between a patient and a payment. In short, they are doing anything and everything they can to avoid paying for the one thing they are legally obligated to do: pay for your health care. I will even submit that if they did away with all the rigmarole and monkey motion, that the cost of health insurance would go down by simply not having to pay for attorneys and boardrooms and negotiations and adjudication and medical coding, and basically everything they do that isn't pay for your health care. What we need then is a new breed of health insurance. Before, we stated that all insurance does is pay for procedures. What if the insurance company provided the electronic medical record system to doctors or practitioners free of charge? Then the insurance could pull procedures performed and pay for them in real time. This automates the entire process of health insurance and quite literally makes it an app. The consumer or patient then could be charged the true cost of the risk, based on age, gender, blood work, and behavior, plus a nominal $10 per month to us to manage the data. By our calculations, that reduces the cost of health insurance by over 50% and frees the doctors of the need to fight with legacy insurance and pay for medical coding. Read the text version of this video on our newsletter site senshahealth.substack.com or click the link to it in the pinned comment. All of the referenced material will also be linked in the pinned comment. We appreciate your attention and help with promotion and invite you to tell us your thoughts in the comments. We will make every effort to read and answer every comment. Part of the reason we do this is to educate you and help you to educate others. Help us help you and every insured person in the world by clicking like and subscribe, telling the algorithm to show this to more people. Until next time. If you like what you heard, like and subscribe here. Subscribe to our newsletter and share articles and videos you find with colleagues. Keep up with the latest in healthcare, health IT, and just some darn good ideas.